Welcome to Markets Now. I'm Michelle Rook with Darren Frye, Water Street Solutions. A down day on Friday in the grains and the cotton market. We were kind of mixed over in the livestock futures. Stock market had a big up day. So let's start off talking about the grains, Darren. Row crops had a pretty good push the first part of the week, putting in weather premium. So today, were we taking weather premium out, or was this just some profit taking?
Well, I think it was a combination of both. We have had some up days here, and so probably week longs taking profits, new shorts being added, maybe some farmers selling, but also the forecast going a little wetter, especially parts of the Dakotas, Minnesota, Iowa, maybe reaching farther south and west than what was originally thought a couple days ago. Those will be the northwesterly flow type of thunderstorm cluster storms. They could bring wind and hail and other nasty things to the party too, but they definitely will have moisture in them. And of course, that will cool temps off a little bit. So I think the combination of those things, along with profit taking and just concern over, hey, let's sell a rally. If I still have grain, I want to sell every rally I can get my hands on. And that's probably what happened as we close the week out.
Obviously, in a weather market, if this forecast doesn't confirm, we could come in here Sunday night and retrace all this, right?
We could. I mean, we had a pretty bad close today. If you look at the daily charts or the weekly charts, we are up on the week, surprisingly enough, but not by much. Maybe 6 cents in corn and 13, 14 cents in beans, but a very bad looking candle today on the dailies. Obviously, if we had immediate strength on Sunday night into Monday because of weather or because of something else, then you could negate the negative action of today. But I think I'd be looking for new lows in these markets unless we see a quick turnaround. Remember, we have the August WASDE just 2 weeks from Monday. And so people will not want to take a long position ahead of that. Everybody is bracing for a bearish report. And obviously, we'll see what USDA says on that report. But we could have acreage changes. We could have yield changes. And certainly that'll affect the balance sheets in the end.
So, what is your thought about yield right now? Because the general school of thought is that the East is making up for some of the holes or deficit over in the West, or not?
Yeah, I mean, that is what the thought is. And I think a lot of people in the trade are thinking 183, 185. I know some of the yield models of people that I follow are in that 182 to 184 range. Those go off crop conditions, obviously, and we're starting into that seasonal decline, but they're still very high. I think the government will look at farmer surveys for the yields, and then they'll look at satellite imagery like the NDVI maps, so showing vegetative health. And, hey, they could raise the yield a bushel or two. They could leave it the same. What I doubt they do is lower the yield. That would be a surprise. I think it's 181 or higher on this report. But I am looking for maybe some acreage decreases on this report and then in the September report, because NASA said they're going to use FSA data. And we know that we had 3.2 million acres of corn to plant on June 1st before that acreage report was done being assessed. And then we had 13 million acres of beans. That's what they claimed at the end of June. So I think they're trying to figure out, did those get planted or did some of those go to PP or get switched to something else? How many acres have we lost from that 16 million on June 1st? And so that could be a game changer as well.
Yeah, so prevent plant, but the flooded acres that came after planting, those will not get rectified until we look at harvested acres, right? That number would have to be lowered.
I can't say that 100% for sure, but I think that's right. I think that there's no way for anyone to assess how many acres are missing out of that field, that quarter section. There's no way people are going to go out and measure them. And there are holes out there because of the flooding that took place in northern Iowa, southern Minnesota, and parts of Dakota and Nebraska in those corners of the state. And so I think that's just going to have to be picked up in either less yield when it gets all said and done, or a drop in harvestable acres, one of two ways. But I don't think that'll be in the August or September crop report in any way.
Darren, we also saw corn and soybean oil down pretty hard. Do you think it was, in addition, a result to some news about small refinery exemptions?
I do. There was a ruling out in D.C. today, and nobody really knows. It's sealed, but it sounds like they might have to overturn that blanket ruling in 22. where they are making small refineries comply and not letting them out of blending. And this could mean the small refineries have a choice and they don't have to blend. And obviously that hit the soy oil market big. That was a market that was looking like it could have some life to the upside, but that was all negated today. And so now we have to continue to look down. I think that was the headline of that more so than anything else.
And new contract lows in both HRW and SRW wheat. Spring wheat got a push down this week as well because it looks like we're going to have record yields up in
Yes.
the spring wheat areas. And so is this all about supply at this point?
Well, that's what the market is trading and everything is the supply side. And we don't have demand that's overarching and big enough to offset that. So we're trading supply until we get a handle on that. And then we'll shift to trading demand. And right now, the spring wheat crop looks great. There might be some disease and quality issues. I've heard that scuttlebutt. But in the end, a big crop, maybe 5-6 bushel bigger than last year. It might not be quite as big as what we're expecting, but it's a big one. And obviously, that's going to be bearish. I am not looking for a lot lower prices in Minneapolis. I was looking for new lows in Kansas City and Chicago. We got those today, and we might have some lower ground to go and plow here. But then I'll be looking for a bottom as we get maybe into early August. This would be the seasonal time that we'd see wheat turn up. Just a matter of time, I think, before it does. But we have to forge a bottom here, and we just haven't done it yet.
And another day of new contract lows in the cotton market. Has this been both about supply, bigger supply, and maybe poor demand? And how much lower do you think we're going to go?
Well, that's a great question. I think there's some other things going on. Cotton is tied really to the economic activity cycles very closely, like crude oil, natty gas. And what we see is we see the economy's weakening. That's why the Feds are considering cutting interest rates. Are we seeing enough to cut those and try to stimulate the economy? And so cotton's going to be very sensitive to that, but also sensitive to crude oil. And crude oil's gone down to about $7-8 here over the last couple of weeks. And of course, that makes polyester cheaper, and cotton has to be cheaper to compete. And you tie that to Brazil's harvesting a crop that's 2 to 3 million bales bigger than a year ago. And we have to get that worked into the marketplace. So when you put all those factors together, we broke contract lows this week. And I'm still looking down another 7-8 cents on cotton, probably down to the 60-63 cent level before we can even see if we can forge a bottom there in cotton.
You mentioned the economics, and of course, looking at the financial markets. What a wild roller coaster ride here this week. Back a big update today with PCE coming in, 2.5%.
Yes.
But Fed meeting next week. What do you think they're going to do? Are they going to leave things the same and then maybe change rates in September, or what's your thoughts?
Well, I think I don't know if they should cut or not, but I have a suspicion they might cut. They don't want to go so far that when they cut, they've already caused a big problem. A lot of times they tighten too late and then they loosen that up too late. And so I wouldn't be surprised if they announce a cut in September. But boy, the PCE data, even though it came in on expectations, that's still pretty strong. It's not as weak. That's one of their favorite metrics they like to use. And so we'll have to see what Powell and the Fed board decides. But obviously, that would help our dollar go down if they cut. That would help our commodities go up. It provides a tailwind to our commodities. And so maybe we'll see something like that. But the rollover in stocks this week and last week is more about the tech stocks. We've seen a rotation out of these tech stocks like the NASDAQ and S&P and, NVIDIA, Apple, Microsoft, Google, those type of stocks into smaller caps. That's why you see the Russell taking off, and even the Dow up a lot compared to the S&P 500 and the NASDAQ, which are loaded up with tech stocks.
Cattle market actually held up pretty well in light of all of what was going on with the stock market here this week. Cattle market, though, trading some higher cash trade up $2, and we made new highs for the move in live cattle before kind of closing mixed on Friday. Do you think it's just we have the cash priced in and now we're going to have to wait for the next piece of news?
It's possible, although I didn't think the close was too bad. I know August backed off, closed a little bit lower. But if you really look at today's range, a very narrow range day, that could mean that we got a down move coming. That could mean that we just have a pause before scoring new highs here for the move. but we're right at the upper end of the range. I'm bullish cattle just because of numbers. I don't think the consumer is backing away from the beef. The people that want to eat it are paying for it. People that don't like it as much have gone to pork, chicken, other cuts, or substituted some other source of protein. But I do like the market for higher, and seasonally, we are going to move into stronger seasonal as we enter August and September. So if we can hold this thing together with smaller numbers, even though carcass weights are really up, we know we're adding weight, and that's taking a little bit more feed for consumption. Obviously, that's why the feed and residual number, I think, was up in the July WASDE. And so if you look at this, we could find ourselves with higher cash and higher cattle futures as we roll into August here. That would be my bet. I'm looking up still in cattle.
All right, thanks for joining us, Darren Frye, Water Street Solutions, and that's Markets Now.